right, so let's just share some numbers here. I've got it right here in front of me. Here's some facts for you. Best market, 18th best market return was in November. Bonds had their best month since 1985. Gold has shot up past $2,100 yesterday. And yet, Jamie Dimon, JP Morgan Chase, some of the people you hear out there, big names, say there's a recession coming. It's almost certain, they say. Concerns with the Fed, raising rates, dropping rates. I get so confused, I get a headache, so I call my friend Nick Hopwood. He's a certified financial planner, founder and president of Peak Wealth, peakwm.com. His effort lately, no lazy money, trust the plan. All right, because I have to trust the plan right now. Nick, good to see you.
Hey, good to see you, Steve, as well. Thank you.
Yeah, I need to trust a plan right here because I got all of these conflicting indicators. The market's up, bonds are good. But other people are doom and gloom over here, tall cotton over here. I don't know, Nick. Help me out here. What's going on?
Well, it's part of the healthy debate, but you're always going to have, the market trying to climb this wall of worry. There's always going to be recession fears. But the recession fears over the past year, they just have not come through to fruition. The market has had a great rebound year after last year. In fact, we're sitting on all-time highs, I should say calendar year highs for 2023, but we're still below the all-time highs of December 21.
So, if you're an optimist, there's still room to grow. If you're a pessimist, you can run because the bond markets is where people often go to protect themselves, right? Both look pretty good. I mean, as of the most recent market looks, right?
Yeah, that's right. And I'm glad you brought up fixed income because a lot of our investors, particularly those who are thinking about retirement or already retired, they might find themselves with a balanced risk portfolio. And the fixed income could be a third or up to a half of that portfolio. And so forward-looking returns of 5 and 6% in fixed income is huge. And we look at the historical returns for stocks, and while it's certainly not linear and we don't know exactly what the path will look like, the history suggests 8%. So a balanced portfolio is looking pretty good right now.
All right, so stocks, bonds, gold, all doing pretty well. You could have put your money in any one of those three places 6 months ago and be happy about how things turned out over the last 6 months, right? We're still not back to the all-time highs. But, okay, so let me ask you about something else that often is in the headlines, and I don't think people have a lot of understanding. The Fed raised the rate, lowered the rate. I mean, they understand how it affects the interest rate on a mortgage or the interest rate on a used car or even, on their credit cards if they have a balance carried over. But what's going to happen next? And what does it mean? Is the dollar in good shape, bad shape, and what does that mean? It's just a bit of education here, Nick, for all of us.
Sure. So the Fed governors and the Fed voters are threatening that they could still raise rates next year. But the market participants are suggesting that's not the case, and they're pushing back, predicting 4 rate cuts for next year beginning in May. And so that's really two different stories, okay? And so when I think about, people calling for a recession, right, they're looking at the fact that interest rates are high and that the Fed is going to break something. But if the Fed has to cut, right, that's usually supportive for markets. It would be bullish for stocks and bonds. It would be bearish for the dollar, to answer your question. And when we have a falling U.S. dollar, it's wonderful for our international investments, our emerging markets, as well as our commodities.
So there's always opportunities, what I hear. And your term is always no lazy money. So there's always a room for some improvement there. All right, so here we are. We're just in the front end of December here. And this is something that, and I have a CPA because talk about things that give me a headache. Trying to understand tax returns in America is supposed to be easy. It's not that easy. And you suggest not too late for some year-end tax planning. If you got a little bit of extra money that came in, if you've got, a rental house, you've got any extra money coming from any direction, make sure you're getting your stuff tidied up. Is that a fair way to put it?
It sure is. So if you're a small business owner, if you have rental real estate, as you say, if you have, an outsized bonus or a stock, a stock option plan, you have to make sure that you're penalty proofed. You have to make sure that you're not going to have any surprises come April. So now is the time where you can still make changes before year end and have time to, at least understand what your liability could be. Or maybe you have good news and, you're going to find yourself with a surplus and you can have a nice spring break with that money. Or you can fund a Roth IRA or an HSA or, top off your 401 for the end of the year.
One thing I did notice, and this is going to be important for some of those small businesses, the ones that use Venmo and other cash apps. Apparently, they were going to lower the threshold to $600 that you had to fill out a new form from the IRS. Apparently, that's been put on hold again, right? So people don't have to worry about that. The threshold remains at $20,000, which makes a lot more sense. I mean, if you sell one used car or sell an old boat out of the yard, you take Venmo, all of a sudden you got to report to the IRS. What a hassle for the average guy, right? What do you know about that?
Well, my understanding is exactly as you described. You're kind of off the hook for one more year. I think I read an article in the Journal that suggested that Congress was disappointed with the IRS ruling there. But I don't think it affects, well, I should say it is affecting more and more people, but it's kind of a small story as far as I'm concerned.
All right. Well, fair enough. So let me, I use Venmo here and there. We make a little, it's not a business though. So that's why, to me, I'm like, why would we report things that aren't business related? But I digress. Let me ask you this. With all the things we talked about, stocks, bonds, gold, all seem to be doing well at the moment. But there's always a correction. There's an up, there's a down, there's an up. What goes up must come down, right? All of that. Any feeling about 2024? And I'm not asking for advice. I'm just kind of getting your overall, do you feel like we're going to have a good, strong market? Do you think there's a chance for that recession? Who do you believe? You read the experts every day. You're immersed in them. Just kind of what your feelings are.
Right. So there is a healthy debate out there, but when we look at the big data, the big data analytics at calendar years, election years with a first-term president. And what's interesting here is that the last 10 times we've had an election year with a first-term president, the markets have been positive. And, I think when we look at what's just happened in November, right, we're in one of the best months, the 18th best month there, you have it on the screen, 18th best month in the last 73 years. The next year after that, okay, we're having returns on average of 9% and up 72% of the time. So between those two stats, regardless of whatever else is happening in the world, that seems like a tailwind, if you ask me.
Yeah. Well, I hope you're right. Makes people nervous, that's for sure. Nick Hopwood, folks, for those of you that watch on TV, we have a QR code, so you can always find it and get directly to Nick, because he always says, get a second opinion. There's your QR code for those that watch on streaming and on television. There it is. Just click it with your phone. Boom, you get to talk to Nick yourself in person. Nick, tell the folks how they can find you online.
Yeah, it's peakwm.com/Gruber. And on that page, we have your complimentary Social Security optimization tool.
There it is. Good stuff. Nick, I guess we'll just go with the good news for today and ride with it. Thank you.
Thank you, sir.
Nick Hopwood, everybody. Look, why argue with good news? I'm not gonna. I've got a good doctor after the break. You don't want to miss this.